for those of you here in Korea and around the world. Thanks so much for joining us on Business Daily. Coming to you live from Seoul, I'm Jung. Before we get started, let's first get a glimpse of today's highlights. Korea is stepping up efforts to breathe back life into the country's struggling tourism industry by winning over the hearts of Chinese travelers. After international sanctions were lifted from Iran, global economies, including Korea, are pinning high hopes that this will lead to more opportunities in the second largest country in the Middle East. We'll sit down with an expert to talk about this. But first, Korea's producer prices were down 4% last year, marking the biggest yearly drop since 1990, when related figures were first compiled. The Bank of Korea says plunging global oil and raw material prices led the slide. The price of Dubai crude, which Korea uses as its benchmark, had tumbled to the $30 a barrel level last month, down sharply from the $50 plus level it was at in January 2015. Even in 1999, following the Asian financial crisis, producer prices only dropped around 2%. With producer prices acting as a major indicator for consumer prices, it's widely forecast that prices will remain low. The Chinese economy expanded at its slowest annual pace in a quarter of a century last year. China's GDP grew 6.9% in 2015, but that's still within the range of the government's target of 7%. For the last 3 months of 2015, China's GDP rose 6.8%, down from the 6.9% expansion in the third quarter. The fourth quarter growth was also the weakest quarterly growth on record since early 2009. Analysts are predicting the world's second largest economy will slow down further this year, despite government measures to boost spending and cut interest rates. Amid the global stock rout, investors here in Korea are also shouldering painful losses. In the first 2 weeks of the year alone, stock funds have seen nearly $3 billion in value evaporate, much of that in funds betting on China. Our Eunice Kim takes a look.
It's not just the cold weather outside that's driving investors inside. Damages from Korea's stock funds are snowballing to the tune of $2.89 billion. Of the more than 1,500 equity funds out there, those that invest in overseas stocks are dealing with a valuation loss of more than 9% in the first 2 weeks of the year, making domestic equity funds look better at minus 3%. As expected, the worst of it all were funds that put their bets on China. Funds linked to mainland China lost 15% of their value, or $402 million, while those on the Hong Kong Hang Seng Index dived 12%, or $444 million. A red light is blinking on ELS or equity-linked securities, too. Following China's market rally in the first half of 2015, Korean investors staked some $20 billion in 3,000 ELS products that let them indirectly invest in Chinese stocks via Hong Kong's bourse. But already, 144 of them stand to lose their principal, as the index to which 60% are linked keeps falling, below a so-called knock-in barrier. If the H shares slide below the 8,000 line, holders of 350 ELS products worth $694 million lose their principal. And if the plummet crosses the 7,000 mark, that at-risk sum swells to $3.8 billion. As even investments advertised as mid-risk are turning a dangerous corner and equities and commodities alike are evaporating in value, Korean investors are struggling to find a safe place to park their cash. Eunice Kim, Business Daily.
Hyundai Motor and its affiliate Kia Motors car sales reached record high levels in Europe last year. According to the European Automobile Manufacturers Association, the two car makers closed the deal on over 854,000 cars, up 10% from the previous year. Both Hyundai and Kia saw on-year improvements in sales, but on the global stage, they ranked 6th, with Volkswagen topping the list, followed by French car brand Peugeot. Market watchers say Hyundai's new compact SUV Tucson, released in the latter half of 2015, drove overall sales, and Kia's new fourth-generation Sportage is expected to boost business this year. With the start of a campaign known as Visit Korea Year, the government announced big hopes to continue its recovery streak from the MERS outbreak that took a toll on tourism last year. And it has its eyes on Chinese travelers, who have been increasing in number by more than 12% annually. Our Jung has more.
The number of foreign tourists who visited Korea last year was at a 12-year low of about 13 million people, down 7% from the previous year due to the unexpected MERS outbreak. But government-led efforts to revive the country's tourism industry, like visa fee waivers, tax refunds, and nationwide sales events, managed to lure back a record 3.6 million visitors in the fourth quarter alone.
It usually takes about a year to recover from external shocks, but to have returned to levels similar to the previous year in just 4 months is a great achievement.
And in light of the state-sponsored 2016 Visit Korea Year, the government says it intends to continue this momentum by mainly targeting the Chinese tourists, which made up almost half of the number of travelers to Korea last year. The Ministry of Culture, Sports and Tourism says it will do this by extending the visa fee waivers policy, increasing air routes, and strengthening online marketing for the younger generation.
We'll start campaigns for consumers in airports and downtown areas of 5 major cities like Beijing, Shanghai, and Guangzhou, and unfold aggressive marketing with local Korea tourism organization branches.
The ministry added it will host an opening event of the Visit Korea Year campaign in Beijing on Wednesday, promoting Korean culture through K-pop concerts and hosting business forums for some 1,300 participants. Lee Ju-young, Business Daily.
After 37 years, the international community has lifted sanctions on Iran. And Korean businesses are hoping that this will open a new door of opportunities in the oil-rich nation. Take a look.
On July 14th last year, negotiators from the US, Iran, and other nations reached a landmark deal aimed at reining in Tehran's nuclear program in return for lifting international economic sanctions. And 6 months later, the UN nuclear watchdog certified that Iran had upheld its requirements.
The United States and the EU will immediately lift nuclear-related sanctions, expanding the horizon of opportunity for the Iranian people.
For Iran, the lifting of sanctions is expected to unleash new opportunities for its battered economy. Not only will it unlock access to $100 billion in frozen assets, it will also end a European oil embargo on Tehran.
This is an encouraging and strong message that the international community must keep in mind in our efforts to make the world a safer place.
Upon hearing the news, the Korean government immediately lifted restrictions on bilateral trade and investment with Iran. The finance ministry said local companies will be able to buy oil from Iran and make financial transactions with the second largest market in the Middle East. There are also growing hopes that the removal of sanctions will lead to more infrastructure and shipbuilding orders, which will eventually help secure greater growth momentum for Korea.
And to tell us more about this, Professor Yang Joon from the Catholic University of Korea joins us in the studio today. Welcome to the program.
Happy to be here.
All right, so Iran broke away from its 37 years of economic isolation on Saturday. Now, we want to know, to start with, what types of, let's say, the sanctions that have been imposed in Iran, up until now?
Okay, well, sanctions began in 1979 when the Iranian Revolution took place and there was the U.S. Embassy hostage crisis. But it really got a lot worse around 2002 when Iran started its nuclear weapons program. And that led to U.S.-led sanctions in 2006. And a lot of major advanced countries joined in that sanction in 2007. Korea joined the sanctions in 2010. Now, the major points of these sanctions include a ban on supply of weaponry and nuclear technology, uranium enrichment products, block on arms exports, asset freeze on key individuals and companies. Korea froze assets on 126 institutions and companies. So Korea wasn't dealing with those companies. And ban on transactions with Iranian banks and financial institutions, which made Korean trade with Iran very difficult. And ban on import, purchase, and transport of Iranian oil and natural gas. One of the consequences of this, along with other countries' sanctions, was that even if Korea wanted to import oil from Iran, it could not get things like insurance to cover the shipments.
All right, then considering that Iran is the second largest market in the Middle East, not only Iran, but other global economies are hoping to see some gains from this.
Yeah, I mean, Iran is already the second largest market there, but they see a lot of potential because, well, Iran is the second most populous country in the Middle East next to Egypt. But unlike Egypt, it has a lot of natural resources.
Right.
Fourth largest oil reserves, the largest natural gas reserves, but it's only sixth largest oil producer right now, partially because of the sanctions. And because of the sanctions, all their equipment, their plants are outdated. So there's a lot of hope that Iran will use this opportunity to modernize its economy, and then other foreign companies can take advantage of that opportunity.
Now, for Korean companies, Iran has long been a profitable and an important market. So how big of a trade partner has Iran been to Korea?
Okay, well, not as big as people hope. If you look at the year before the sanctions, 2008, 2009, Iran took about 1% of Korean exports.
1%.
So it's not that much.
All right.
Even now, with the sanctions in place, it takes about 0.8% of Korean exports. So while there will be increases in exports, it's probably not going to be much to really kickstart the Korean economy. Where Korea is hoping is the construction services, because Korea exported a lot of construction services to the Middle East in the past. But if you look at the figures between 2002 and 2010, before Korea joined the sanctions, the amount of construction services that we exported to Iran is very it fluctuates wildly. The lowest was $300 million in US dollars in 2004. The highest was just before the sanctions took place in 2009 with $2.5 billion. So there's a lot of ifs going on there. Iran has a potential to be an important export market for Korea, but the figures show that it's probably not going to be as big as people are hoping.
But expectations are high for the Korean government because upon hearing the news, Korea also lifted restrictions on bilateral trade and investment in Iran. So I know you mentioned a little bit, but what kind of movements do we expect to see from here on out with this lifting of the sanctions?
Okay, well, the biggest change is probably going to be in paperwork and licensing. Before, when the sanctions were in place, you had to get multiple licenses from Bank of Korea, the various ministries, and you had to fill out various paperwork. And because of the ban on dealing with financial institutions, Korean exporters were not always guaranteed to get cash back. And that's similar even today, because while a lot of the sanction-related measures were removed, Korean firms, as well as most other international firms, still cannot deal with US dollars because some of the US sanctions still remain. But because all these paperwork have disappeared, because a lot of the areas where Koreans could not export has been lifted, there is some expectation that perhaps we could export some more automobiles, construction services we mentioned earlier, shipbuilding was mentioned in the report. And this is very important for Korea because construction and shipbuilding are some of Korea's major industries and they're not doing very well right now.
And aside from those construction and shipping industries, what are some other factors that are looking to benefit from this?
Okay, well, the automobiles and some petrochemical services because, well, as I mentioned before, some of the equipment there is very much outdated.
Right.
And Korea has a very large petrochemical processing industry, refinery industry, and that depends on both the raw crude that we get from Middle Eastern countries and then ability to sell that abroad. So this could be a big hopeful factor there if we can get a lot of Iranian oil and then manage to sell it globally.
All right, amid all these positive and hopeful expectations, there are growing worries about the global oil glut, right? Because Iran is obviously an oil-rich nation. So how heavily do you think this lifting of sanctions will weigh down on the current oil market and the global economy as a whole?
Well, because Iran needs money right now to redevelop its economy, they will probably increase production, and that will probably lower prices. Most of the futures commodity markets seem to feel that because of Iran's increased production, the price of oil this year will drop to the $20 range. And that also means that it'll be very difficult for Iran to engage in some major projects because their revenues are not incoming as much as they want. So this will probably dampen Iranian demand for Korean goods as well as global goods. So it's good news. It makes the world safer. It probably will help individual Korean companies, but I don't think this is big enough to really act as a kick to start the Korea's growth.
As well as the slowing global economy.
Yes.
All right. Thank you so much for coming in today, Professor.
Thank you.
And that does it for today. Thanks for watching, and we'll be back tomorrow at the same time, same place for your Business Daily. Until then, goodbye.